Hello guys, how are you doing? Casper here, aka Use Link, and yeah, a Twitter update. Not many charts, but definitely, as always, in my opinion, a lot of great value. You can follow me at UseLinkINV. That goes for YouTube, Twitter, and the Substack service. Without any further ado, let's get straight into why we are here. And why are we here? We are here because Grady. Gold broke out again, highest weekly close ever. Highest weekly close ever, $2,500. That's incredible. Just think about this, right? 2 years ago, we were at roughly 1,600. Now we are at 2,500. Basically a $1,000 increase for gold. That is fantastic. And yeah, nothing more to add, really. Just beautiful, beautiful. Mary here with the gold on the 2-week time frame. So the 2-week time frame, the market clearly broke out and closed above the July high. You can also see here this is the daily, right? We broke that just like Grady showed us. The target is 2,550 roughly, indicating further extension towards the 2,550 resistance level. Especially since the inside bar pattern has been activated. So just overall, gold looks really, really good here on the very, very long-term time frames. Daily, again, you can see here is sometimes noise. And yeah, right now, definitely the monthly and the weekly time frames, maybe even the quarterly as well, are in charge, meaning whatever happens below those time frames, in theory, again, of course it matters, but again, it's basically noise. Look at minimum the weekly candles for gold right now. That's where it is. The WTI here, again, long text as always very detailed, so check it out. But again, you can see gold here is compressing. This was released to yesterday, to yesterday. And yeah, we're basically getting squeezed here a lot. And where are we right now on the we're down 2%. So you can see that we are getting a little bit heavy here in the short term. So potentially we can start to see that move down for oil. You can see the squeeze there. The levels are clear, getting below 72 roughly, maybe 71. Extremely bearish, getting above, I would say at least if we get above that high there at 80, I'm expecting a breakout. So above 80, we are in for a big move for gold. Excuse me, for the oil. We shall see which way it is. URA on the weekly as well. You can see here we came into, also he had this $24 level with a lot of support. We have bounced for now, but still, in my opinion, it's still early, but we need more momentum. The shorter time frames, you can call it the daily chart and below, is still a bit iffy in my opinion. And yeah, we shall see here. Definitely, if oil gets a big hit here and starts to as we just looked at, getting below the 70 level, then I'm expecting uranium to struggle. Why? Because it's energy related. However, looking at gas and coal right now, they look still really good. So a little bit of a mixed signal there. Willem Coupe, by the way, he's a great guy. I've seen tons of video with him on Twitter, excuse me, on YouTube, a lot of videos. Gold miners are valued so low versus gold that they could have a 40x upside. A 40x. Can you imagine if gold miners all of a sudden starts to outperform gold by 40x? Again, it's not tomorrow, and the pullbacks will be extremely dangerous, or scary, you can say. But I agree, gold miners, silver miners right now looks fantastic. I've been saying that for the past week or two here, that we are primed for a big move. And yet again today, we're up 3% on the ETFs. Just incredible. Gold versus stocks. This is an important ratio, by the way. Very, very, very important ratio. Gold versus the SP 500 formed a bullish inverse head and shoulders bottoming pattern There it is. Very beautiful, extremely clear. I love it when you have the pits there basically at a horizontal level. These are by far the ones with the highest position. You can also see here you can add a trend line or a horizontal line across here, false breakdown. A lot of good stuff is happening. Also here to the lowest to there, you can see we have 4 on the bottom here. The top there and there is also connecting. So I think we are poised to basically be in a scenario where the GDX and the GDXJ obviously and silver miners, yes, will outperform the SPX for a decent period of time. And yes, we have resistance here at 0.019, but also up here we have these major highs, which will be extremely big resistance. But again, we are extremely low here. And yeah, the GDX looks primed for a move. It really does. Jay Hinster with USOIL. Range has been set until election. Quite a good find here. You can see here we're basically the same squeeze that we're looking at. The election is roughly, is it September, October, November? It has to be November, right? So we're over here. So again, depending on maybe the outcome, again, who knows? We see the direction. Definitely also here, if we break down, you can see we are hitting roughly 65 here, maybe 66, but also the sell zone is these pivots up here. You also have a low-hanging fruit in there. So sell roughly 95. So depending on which way we go, you have your levels to look out for. Last but not least, Kevin Northstar, great guy, by the way. I'm always glad to be the few times that I had the chance to talk to him directly in various, discussions on Zoom, and obviously that it will be it's always put up on YouTube, more or less always. Great guy, really cool, very calm, and yeah, definitely worth a follow. But I'm quite sure you already follow him, following Kevin. So the US dollar index is breaking down versus inflation. Again, a big important ratio. We have a few ratios that is really important right now. On top of my head here, we have 3. We have gold versus the SPX, the SP 500. You have the US dollar against the inflation. And then you have the gold to silver ratio, which is also potentially starting to come down again here. Yes, it has come up a lot further than I initially would have thought here after that mega breakdown. But there are 3 ratios that is showing that commodities, again, could be in play here. You can see it's starting to break down here. The US dollar in relation to into inflation. Again, you can see right there, the triangle, again, the downtrend seems to be continuing. And that's when the magic happens. I have made similar charts before. You can see here that was the low, basically the peak in the commodity bull market in 1980. Massive surge. And then again here you had a major breakdown just after the dot-com bubble. Breaking down, gold started to run in 2001, 2002, into 2011 over here. And then we had, the dollar perform somewhat well in relation to inflation, but again, we have a breakdown, we have a retest, we are squeezing, breaking down. It might be that the dollar is the king in fiat in the fiat world. I completely agree most of the time, but again, it is losing purchasing power against the it is losing purchasing power overall. And if you invert this, by the way, this chart here, you roughly have the gold price. However, the gold price has already, if you invert this, has already broken, that big 2,100 and 2,100 level. So I think gold is knowing what's coming, for the dollar when it comes to purchasing power. Gold usually knows ahead of time. So really cool chart there by Kevin. So that's all I have for you today with regarding to the Twitter recap. Have a great day, guys. As always, it's a pleasure to do these videos. So please like and all that good stuff. Have a great day. Cheers.